Hello, everyone. Welcome back to our weekly journey into the fascinating world of price action based technical analysis. And we finally heading into the last trading week for the month of January. And in fact, it has been quite a wonderful experience as despite the challenges we faces, we were still floating on the positive side of our portfolio. Today we are immersing ourselves in the XAUUSD chart, preparing for the upcoming week as gold continues to fluctuate within a specified range, reflecting the prevailing indecision driven by market adjustments to the uncertainty surrounding the timing of the Fed Reserve interest rate cuts. Last week's market dynamics, shaped by the uncertainty around the Fed's potential rate cuts, presented to us limited profitable opportunities. However, we are optimistic that this week could bring favorable market conditions as the anticipation of impactful economic features from the United States, including the federal interest rate decision and the non-farm payroll, could act as a catalyst for price movement. It's important to note that the uncertainty surrounding the Federal Reserve interest rate cut timeline and the resilient US economy so far is exerting pressure on safe haven assets such as gold. As always, our analysis will consider technical and fundamental insights, leveraging tools such as the economic calendar, trend lines, key levels, and chart patterns to forecast potential price action for the new week. Before we proceed, remember that this video serves for educational purposes only and not financial advice. While our goal is to enhance your understanding of price action analysis, always exercise caution and consider consulting a financial advisor before making any investment decisions. With the groundwork laid, let's dive right into the business. Well, as usual, we shall be shifting into the daily time frame, and in fact, the technical structure we have here still remains the same in the last couple of weeks. And what I did on the daily time frame was to take into consideration the nature of price action since the month of October, and that's like an historical data of about 4 to 5 months thereabouts to give us an insight into what we will be doing for this week. And of course, the first thing you will observe here is the fact that price action has been on a strong bullish momentum since the month of October, giving us this beautiful ascending trend line that we will be using to guide our trading decisions for this week. In addition to this trend line is this psychological level, which is going to be serving as our key level, and that is the $2,000 area. Now look at this level here and how it had played a major role in determining the direction of price action since the month of October. You will see at some point in the month of October, it was more of a selling niche, as you will see right here. And then during, see, it continued to become a selling niche at this point. Then we finally saw price break out of the structure in the later part of the month of November. And since then, price action had continued to trade above this area, further emphasizing the strength of the buyers around this area. Now, with this information here, we also consider the fact that since the beginning of this year, price action has been going through what I will call profit-taking activities, as you will see that the year started on a strong bearish note, as I think market participants were taking some of the profit off the chart, resulting in this beautiful descending trend line you will see here. Now, with the way things are going right now, and considering the indecision regarding the timing of the Federal Reserve interest rate cuts, the market has been very indecisive, as you will see in the last couple of weeks here. Now, the question going into the new week is whether the $2,000 area will serve as a platform that will incite an uptrend continuation, maybe breaking out of that descending trend line to emphasize the strength of the buyers, or we may likely see price break down this ascending trend line for the first time in about 4 to 5 months to incite the idea of joining a bearish move. Now, to answer this question and position ourselves strategically for the upcoming week, I have a simple trading setup that we will be using to guide our trading decisions for this week. But before we go into that detail, I want us to keep tabs with the fundamental factors that will be affecting the market sentiment in this financial environment. And we all understand that by monitoring the economic calendar, we aim to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on the next potential move. And of course, on the economic calendar, based on the asset we have on our watch list, we shall be focusing on high impactful event from the United States economic docket. Now, the first one for this week is coming in on Wednesday, that's January 31, and we have the ADP employment change. Now, the ADP employment change is a monthly economic report that provides an estimate of the change in non-farm private employment in the United States. And of course, we know that a positive ADP figures indicates job growth and often boost market sentiment as they suggest a healthier labor market condition. Now, on that same day, we have the Fed monetary policy statement, which of course is a comprehensive assessment provided by the Federal Reserve detailing the economic outlook and the rationale behind monetary policy decision. This is one event that majority in the market will be looking forward to, as its impact on market sentiment is very significant. Investors of course will closely analyze this report for insight into future interest rate moves, inflation expectations, and overall economic health. Then later on that day, the most important one is the Fed interest rate decision, of course, an outcome of the Federal Reserve meeting where they will be deciding whether to change or maintain the current interest rate. Then finally, we will be witnessing the FOMC press conference, which is an event where the Federal Reserve Chairman communicates the central bank's monetary policy decisions, economic outlook, and of course answer questions from the media. Then on Thursday, we will be looking at the ISM manufacturing PMI, a key economic indicator that measures the performance of the manufacturing sector in the United States. A reading above 50 indicates expansion, of course, and can positively impact market sentiment as well. Then finally, on Friday, we shall be looking at the average hourly earnings, another event that gives us an insight into the labor sector of the United States. And then finally, we have the almighty non-farm payroll, which everyone will definitely be looking forward to, as it gives us an insight into the present number of new jobs created in the United States during the previous month in all non-agricultural businesses. And of course, this is also going to be giving us an insight into the labor sector, and it is usually believed to be a strong trigger of volatility in the market. So these are the high impactful event we are looking forward to, and of course we do understand that the anticipation of this event usually affect the sentiment of the market, hereby reflecting on the chart as price action. Now, talking about price action, scaling down into the 4 hours time frame, I was able to identify a simple trading setup that we will be using for this week. And of course, as you will see, our $2,000 key level still is very much intact here. But here, what I did here was to consider the nature of price action since the beginning of this new year of 2024, and it's quite obvious that price action has been bearish, considering the series of lower highs that you will see here, giving us this beautiful descending trend line to work with. Now, despite the strong bearish momentum to the downside, we have seen how the $2,000 mark area and the $2,010 has been serving as a barrier for sellers to continue their decline to the downside. And as a result of this barrier, price action in the last 1 week, about 8 days to 10 days thereabout, price action has been confined within that range between the $2,035 and the $2,010 area to emphasize the level of indecision in this market. And the fact that price still trading below that descending trend line is still a suspect that shows that the dollar still has a tendency of gaining traction. However, if we consider all other factors like the geopolitical tension, which of course also gives a market appeal to safe haven asset, we cannot ignore the potentials that buyers could also break out of that descending trend line to incite an uptrend scenario. So you know how we do it in this community, especially when we have a range like this. We want to exercise patience and wait for either the breakout of the resistance line of the range to give us an opportunity to buy. It could come back and retest the descending trend line to incite another wave of bullish momentum, or the breakdown of the support line to give us an opportunity to sell. However, in this case scenario, considering how the $2,000 area had played a major role in negating all attempt by the sellers to break through, I'm of the opinion that we will need some further confirmations to give us that confidence to join that decline to the downside. And of course, trust me, I will be with you in the comment section of both my trading view and all my social media platforms to give you updates as at when due, after monitoring how participants in the market will be reacting to this current structure during the early hours of the new week. If you have found this content helpful and useful in making your independent trading decisions for this week, I'll really appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.